Welcome back. So we're bracing for impact here, considering how global markets are doing. But let's look at the cues back home. A lot of earnings came through over the weekend. So we've got our team standing by with all that we need to know. Let's start off with, of course, big earnings coming in from State Bank of India. Ritu, how did the numbers look?
Well, Surbhi, a slight miss on the numbers compared to our poll. Profit flattish at 0.9% because of a sharp rise in loan loss provisions, and net interest income growing by about 5.7% over the previous year. And sequentially, of course, both did see a decline. Margin saw a dip of about 8 basis points over the previous quarter at 3.2% because the yield on advances dropped while the cost of deposit was largely flat. If you look at the asset quality, while the gross and net NPA ratios are stable or even improved, slippages were sharply higher at about 8,707 crores compared to about 3,900 crores in the previous quarter. But the management is not overtly concerned about this because they attribute most of this to seasonal factors and one-offs that are going to rectify in the quarters ahead. The advances growth was good at more than 15% over the previous year. Sequentially, it was muted, but no surprises there. But deposit growth at just a little over 8% compared to the previous year is sharply below the 11% odd level that we're seeing for the system. But in terms of guidance, it is strong. Credit growth of about 14 to 16% for the year. Credit cost at current levels are below 0.5% and margins between 3.2 to 3.4% kind of levels.
Okay, Ritu, thanks a lot for that. Well, let's hop across to Mangalam here, who's here to tell us about Titan. Hey, Mangalam, morning.
Good morning. So Titan's results were muted, and the good part is we knew it would be muted because the company had given us the cheat sheet, and the thing is that the numbers weren't much worse than what the street had anticipated. So if you look at the revenue, the EBITDA, the margins, the net profit, actually they've been largely in line with muted expectations. The stock actually had seen a bit of a sell-off post their first quarter update as well, but there are green shoots in this performance as well, in which I believe would keep the stock afloat in today's trading session. The first part is that gross margins in the company in the first quarter, along with EBITDA margins, have both been stable. If you adjust for the bullion, the jewelry EBIT margins have actually improved by 20 basis points year on year. Then you have the triggers of festive and wedding season ahead, along with the tailwind of lower customs duty announced in the budget itself. What's not good, however, is the buyer growth was just 2% this quarter, perhaps on account of heat waves and lack of wedding dates, etc. Studded share at 26% was unchanged, and high-value solitaire sentiment was subdued, telling you about a latent impact, perhaps, of the lab-grown diamond. So those are a couple of factors that we will put forth to the management today.
All right, Mangalam, thank you very much for that. Well, Divi's Laboratories also reported numbers. Ekta is here with details. Ekta, morning.
Well, thanks for that. Well, Divi's Labs, it missed estimates in terms of what the consensus was working with. So revenue up around 19%. Street was anticipating a 23% growth. EBITDA came in at around 622 crores and margins came in at around 29.4%. Street was anticipating around 30-odd%. And profit was also a little below estimates because the tax expenses were higher this year. However, the commentary seemed to be largely on the positive side. So, for example, the company said that they are seeing opportunities from the Biosecure Act. They are seeing opportunities in phase 2, phase 3 molecules as well. They are positive on the GLP-1 opportunities, and the management maintained their growth guidance at double digits for FY25 as well. So overall, maybe the valuations could probably weigh a little bit when it comes to Divi's Labs, but based on what they reported and based on the commentary especially, the stock should be in the green.
Okay, all right, got that. Thanks, Ekta, for Divi's. Back to Mangalam then. Mangalam, for Britannia, I think that margin was below your poll, but overall, how does it look?
Overall, it's a good number, irrespective of the margins, largely because in the last quarter itself, Britannia called out recovery in rural, and that's panned out even now. And the way they've been expanding their presence in rural, they should benefit from this recovery. Why do I say that? Because revenue growth has come in at around 4,250 crores. The street was expecting a number just shy of 4,200 crores. The EBITDA 754 crores, not much below street expectations of 775 crores, and the net profit at 500 crores as well, marginally below our expectations of 530 crores as well. The domestic volume growth, that is coming at 8%, and that's the higher end of expected 7 to 8% range. And the company said that the rural market share has grown at a faster clip than urban, and they have increased their presence there, so well positioned. Their earnings call is at 10 a.m. today, so up until then, we see the stock slightly, dilly-dallying, but more importantly, the commentary from the con call will be crucial to watch out for. My sense is it would see some green today.
All right, Mangalam, and you'll give us an update on that front as well, so we'll keep an eye out on that. For the time being, let's hop across to Vamakshi. She's here to tell us about LIC Housing Finance. Morning, Vamakshi.
Well, good morning, Nigel. Going with the red for this counter because disbursements have seen a sharp fall sequentially, down nearly 29% 915 odd crores. AUM growth was also rather muted, was up only 4.4% YOY and was largely flat sequentially. On AUM growth, the management believes that clocking 10% growth would be challenging. So this year they're targeting somewhere around 8+% growth. The NIMs also came in at 2.76%. This is a very sharp fall on a sequential basis, down from nearly 3.15%. The management also has revised its guidance for NIMs. They now guide for 2.75 to 2.8% NIMs as compared to earlier guidance of 2.7 to 2.9%. NII came in at 1,989 crores. This is lower than what we were expecting, a downtick of almost 10% YOY and 11% sequentially. The asset quality, however, was rather steady. GNPA came in at 3.29% and NNPA at 1.68%, but the net profit was down nearly 1.8%, but on a YOY basis, but was up nearly 19% sequentially. So overall, given muted growth in AUM as well as the contraction in NIMs, going with the red for this counter.
All right, Vamakshi, thank you very much for that. Well, delivery is the other one, which is going to be in focus on the back of earnings. Back to Mangalam. Mangalam.
Well, new age companies have seemed to have done well this quarter so far. So delivery as well, the third straight quarter of positive EBITDA. The operational turnaround continues for them, and they've also changed their depreciation method. So as a result of which, that's aided their net profit by close to 39 odd crores as well. Revenue growth of 12.6%, EBITDA coming in at 97 crores versus a loss of 13 crores. Net profit coming in at 54 crores versus a loss of 89 crores. Even if you take away the benefit of the depreciation, it is a positive. Express Parcel out there, the volumes grew by about 0.5%, revenue grew by 6%, and margins improved to about 18.2% mark. But it was the part truckload business that led to an improvement in operating and revenue performance. The tonnage growth out there was 16%, revenue growth of 25% out here as well. Margins came in at 3.2%. Same time last year, it was a negative 8.5%. So that was the big swing factor. See green on delivery.
Yes, absolutely. I wonder if you can do a Zomato today. Maybe not that much in price terms, but just in terms of market enthusiasm. Thanks for that, Mangalam. Let's move on, talk about IEX. Vivek, morning. So we had volume data. How does it look?
Well, good morning. You know, what actually happened is the company has given the operational update for the month of July, and it's a strong volume print that the company has given. So on a year-on-year basis, volumes have grown overall basis almost 56%, coming in at over 13.3 billion units. This also indicates that the company has most likely gained market share compared to its competitors. Now, talking about the total electricity volume, that includes largely the day-ahead market. Now, it's up 29% on a year-on-year basis, coming in close to the 10 billion unit mark. Green electricity volumes, has gone up almost 3.5 times on a year-on-year basis off a low base, and renewable energy certificates up almost 5x on a year-on-year basis, also off a low base. Now, when you talk about the real-time electricity market volumes, that's up 31%. So overall, very strong volume print, except some, expect some green on the stock as far as the IEX is concerned.
Okay, some green, we'll take that. Thanks a lot for that, Vivek. Well, let's wind this down then with Ekta on Narayana Hrudayalaya. Ekta?
Well, Narayana, came out with a largely in-line set of numbers. We had the revenue up 8.7%. Kotak was anticipating a 9% growth. EBITDA came in at 303 odd crores versus estimates of 306 odd crores, which resulted in a margin of around 22.7% and a profit growth of around 9.5 odd %. Overall, the parameters look good for the company this time as well. So I'm going with the green for Narayana.
Okay, all right. Thanks very much, Ekta, for that. Sudarshan is now joining in on Amara Raja Energy and JK Tyre. Sudarshan.
Good morning, Prashant. So we'll start with Amara Raja. Earnings have improved year-on-year and volumes were led by two-wheelers. Talking about the headline numbers, revenue has increased by 17%, EBITDA was up 19%, margin has risen 30 bips year-on-year. Companies say for the automotive segment, volumes registered significant growth in two-wheeler segment, while four-wheeler volumes saw a tepid demand. In the industrial segment, volume growth overall was moderate. For JK Tyre, it was a mixed quarter. Revenue has slipped and it was dragged by OEM segment. Margin, though, has increased 140 bips. Company says pricing and premiumization have offset raw material cost pressure. Revenue marginally was lower due to decline in the OEM segment, and exports have recorded double-digit growth. And going forward, festive season and favorable monsoon will be key triggers for the industry. So I'm going with green for Amara Raja and red for JK Tyre.
All right, got that. Thank you very much, Sudarshan. So let's quickly recap our list of top stocks to watch. It's a long list today. The ones that have positive news flow are SBI, Titan, Divi's, Britannia, Delivery, IEX, Narayana Hrudayalaya, and Amara Raja. Stocks with negative news flow around them: LIC Housing Finance and JK Tyres. Okay, so that's the stock list for the morning. But back to the big global picture with that sell-off really, really intense, not just across equities, but of course commodities have been really wobbly as well. We have Manisha with the latest. Manisha, so lots going on. What do you have your eye on?
Oh, absolutely, Survi. If you look at the crude oil prices, I'll start with that, and we're trading at a multi-month lows onto this one. 4 straight weeks of decline for this, and the way the US dollar index has been declining seems to be giving some support to the markets right now. So after nearly 4% of a cut in the previous week, the crude is trading 0.5% on the higher side right now. It also has to do with the Middle East tensions, which seem to be flaring with Iran vowing retaliation or for assassination of their Hamas leader. And then it also is about the decline in U.S. inventories. But the metal prices have continued to decline as well. The previous week saw copper, aluminum, zinc prices decline anywhere between 2 to 4%. It's trading at a 4-month lows for copper and aluminum. But with the China services data coming in slightly positive than the street anticipation, there could be some opportunity buying in metals as well.
Okay, all right. Got that, Manisha. Thanks very much. That's the commodity roundup. By the way, just pointing out that in Asia, it's not just the Japanese market, which is down 5%. The South Korean market is down 5.5% as well, because it's so closely linked to, of course, a lot of the tech-heavy sectors out there as well. So big fall. Taiwan's down 6.5%. So they're deep cuts.
What has happened is that NVIDIA, I was reading a news report that the new chip, which is the Blackwell chip, they've kind of delayed the launch of that particular chip. So I think that is the reason why markets like Taiwan, the Taiwanese market is very big on semiconductor stocks and the semiconductor sort of value chain, the supply chain. That's the reason why you've got sharp cuts coming through there. Specific reason with regards to NVIDIA, which has been such a leader really. But I think we have Prakash Dewan with us. Najib?
I think, I'll tell you what, I think we'll slip into a short break. We come back, we'll get chatting with Prakash Dewan. We'll get to some fundamental analysis. Don't go anywhere.